Hey guys, welcome back to the channel. My name's Julian. I'm the head of strategy here at Ripehouse, and today we're going to be talking about how to prepare in 2024 for potentially our first rate cuts for a couple of years. So I guess firstly what I want to touch on is understanding, someone who's loves their health and fitness. I want to get into the pyramid, and so firstly, if we go into a pyramid, got our food pyramid. So why am I bringing this up? So when I talk about the food pyramid, and this is maybe a little bit controversial in this day and age, but we've got ideally our foods we want to eat for a healthy, balanced lifestyle. What's going to get us a good result in terms of health? We want to have, meats, veggies, all that kind of stuff, and your fatty foods and your junk food sitting at the top. So what I find when it comes to property investing is that the best way to go about it, typically, wrong way, is that people actually go the inverse of where they should be spending their time when it comes to property investing. So what I mean by that is if we have a look at the pyramid here, and at the top of the pyramid, we've got price point and yield, followed by education, then service providers, and sitting in service providers, I mean, building and pest inspectors, property managers, conveyancers, etc. Lending strategies, setting up an actual strategy with an investment lending specialist, your accountant, financial advisor. So knowing what you're actually working towards, not only in this first acquisition, but potentially your plan for the next 10 to 20 years. And then asset selection. So most investors spend all their time at the very top. They're spending night after night after night, realestate.com, forums, Reddit, Facebook, YouTube videos, trying to find at a certain price point and yield that they feel comfortable and they like, just because they've read it online. And then they're spending hundreds and hundreds of hours on education. I guess my personal opinion on education is education's great in terms of, it's great to get knowledge, so you should know the important things, but not everybody, it's best use of their time when it comes to education. If you're a working professional or you're running your own business, sometimes just getting the base knowledge is great, but it's spending more of your time doubling down on your strengths or what's, getting you more income is actually probably going to get you a better result 9 times out of 10. And then the service providers, when the reality is asset selection is the most important thing when it comes to property. So, and that is why the standard Australian home outperforms investment properties across the country, because when we come to asset selection, most people are doing the exact right things when it comes to selecting a property. When we go to buy a home, we're checking out the neighbourhoods, we're checking out their schools, that they're in the right location and that we're happy with everything that goes on in that school. We're checking out the shopping centres, the amenities nearby. We're checking the street appeal, what our neighbours are like. We're really honing in on all the basic principles and checklists in terms of, we don't want to be too close to public housing. We don't want to have noisy neighbours or childcare centres or tips or abattoirs, all those kind of things. On a home, those things happen. On an investment, they very rarely happen. And then when it comes to a lending strategy, most people are going out there and rather than sitting down with an expert and formulating a plan, and everybody's plan can be different. I think this is one of the biggest misconceptions when it comes to property investing. Everybody thinks that they have to be working towards retirement when they're buying an investment property, or that they're working towards a passive income goal, or they're working towards having 50 properties. And that's just simply not the case. So narrowing down with an investment strategist in terms of what it actually looks like for you. For you, your risk tolerance might be that you only want to buy 1, maybe 2 investment properties, and you want to use them to pay down your home quicker. Or you want to use them to be able to buy your dream home in a location you just never thought you could afford, or you wouldn't want to take on such a heavy mortgage. It could look like retirement. It could look like leaving assets to your kids or your grandkids, but it's really important, that next part, because this can determine whether you actually get stuck at just 1 property or 2 properties, or if your goal is to build a multi-property portfolio, getting that right, because this one here can cost you hundreds of thousands of dollars in deductions or missed borrowing capacity if you're not structured up correctly from the beginning. So I've probably got 3 takeaways for people to prepare themselves for 2024 in the event that tax cuts do come their way. So firstly, it's to narrow down on your location and asset selection, understanding what you're targeting and why. If you want to go for a new build, that's okay, but why are you doing it? What is the outcome you're going to get? Is it just that you're doing it for depreciation? Okay. Well, if that goes away, does that affect your long-term plan? Is capital growth going to be better for you? But really narrowing that down. What are the fundamentals you're looking for in that area? Are you doing it because you like it? Is it because it's off the back of population growth? Is it off the back of projects, etc. coming through? Is it because it's nice to near a beach in comparison to other suburbs? So targeting that. And also, is it in a good 3 to 5 year growth window? Because what we don't want to be doing is purchasing an asset that is going to go sideways and not do much for the first 3 to 5 years, because an asset that performs strongly in the early cycle is creating strong equity growth for you to leverage into multiple strategies. So that's why I say asset selection is the number one important thing when it comes to preparing yourself, because I mean, I've worked with hundreds of clients in just the past 18 months alone, where sometimes their goals can change based off health, family situations, work situations. If you have the right asset type selected from the beginning, when life does throw you those curveballs, you can enact and chop and change your strategy. But if you're going out there and selecting a property tied specifically down to, say, depreciation or tax benefits, that property may not be flexible with your goal and your changes moving forward. The second part is getting a lending strategy in place. So, identifying what is your borrowing now, what is it going to be in the future, what can you do to improve that? Not only what are you looking for to do in this purchase, but what does step 2, 3, and 4 look like for you? I will call a poor broker will sit down in front of you, and it's like going to McDonald's. They just take your order, you walk in, you tell them that you want a home loan and you want to buy this $500,000 property, and they just tell you yes or no, and they take your order. A lending specialist will ask you why, and what are you trying to work towards, and what that enables you or doesn't enable you to do in the future, and what is the most correct way to go about that. The third part is preparing to act before the masses. So the other thing that I think, and this kind of ties into here as well, and this is that people get their goal in their head and then they start doing all of this stuff at the top. They haven't even prepared or jumped into and narrowed down these things, and they do all these things first, when these has the biggest outcome of where you're going to end up. So if you know rate cuts are coming, and say they land in May or potentially they land in July, and if you're then making the decision to then go sit down with your broker and you decide, okay, Mr. Broker, what can I borrow? When is my equity release going to happen? Okay, I'll send you my docs next week or next month. And then all of a sudden it gets to September. You're just too late. The fact of the matter isn't, and I might harp on about this sometimes, but property investing is about time in the market. The $600,000 asset today, in 6 months' time, if you're selected well, it's probably going to be a $650,000 asset. So your inability to act is more than likely going to impact your financial outcome and that opportunity cost from being out of the market. So getting your ducks in a row, taking care of these two things. These things can happen later or during the process, but these two are the most important. This is your meat and veg and your fruit, okay? This is what's going to get you the results moving forward in your property portfolio, because the shortage of stock means you cannot time your way into a market in the current space in particular. There is barely any stock based off very, very low approval rates coming through in terms of building and continued population growth. So your ability to act and act quickly, but also considered by having these two narrowed down, allows you to come in and execute further at the end. Okay, so I hope that provided a little bit of clarity in terms of what you can do to prepare yourself for 2024 when and if these rate cuts do come through. Even if they don't, just things like tax cuts and stabilizing of interest rates, we are already seeing at an advisory level, there has been significant inquiry increase into property investment since around about September last year, and it's only getting stronger as each week goes through. So if we're getting to May or July, you're probably going to start to be too late. You might be like a lot of people who jumped in at the very, very top of the market in 2021. We want to avoid that, and we want to prepare early and get these two things bedded down to make sure that moving forward, we create ourselves options, because that, to me, is what property investing truly is when it comes to wealth creation. It's about creating options for yourself, for your family, and being able to then execute on and having different options as life changes for you along the way is going to be the number one, I guess, winning aspect moving forward. So I hope you found today's video helpful in some way. If you would like to leave a comment, like to get your thoughts, please leave a comment below. As always, please make sure you subscribe, leave a like on the video, and can't wait to catch you guys in the next one. Bye for now.